Hey everyone, my name is Jack. Welcome back to the channel. I cover a variety of topics as they relate to real estate, investing, the markets, and everything as it relates to personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. But a couple of months ago, I did a video talking about how Sam Zell, the famous billionaire real estate investor, currently is sitting on about $3.5 billion worth of cash waiting for a new opportunity. While that hasn't changed in recent weeks, Sam Zell did recently come out to say that he does have a plan for this money, and I want to go over that in today's video. Now, Sam Zell's not alone in holding a ton of cash. Investors in all industries are tightening up right now, being very conservative in a lot of ways, at least on the larger scale. Larger investors, retail investors, are going to town with Hertz bankruptcy stocks and all that sort of stuff. But Sam Zell and other larger investors are, for the most part, very conservative right now, holding a ton of cash, waiting for opportunities to arise. And Sam Zell actually talked about this in the commercial real estate space just a few weeks ago in an interview.
Just sitting here watching, and we're not seeing anything happening.
Sam, why do you think that is? Is it because prices aren't low enough yet?
Oh, I think that rather than referring to it as prices aren't low enough, I think that there's been very little opportunity at price discovery. My guess is that those sellers that wanted to sell still remember the prices that were available 7 or 8 weeks ago. The buyers are looking at a very different world and expecting to see significant discounts from where we were 7 weeks ago. And when you got that big a spread, nothing happens. And I think that's an accurate description.
In other words, we have a sort of market gridlock where we have buyers who are very conservative compared to just a few months ago, holding a lot of cash, really trying to be very selective with the deals they pick. So they're throwing lowball offers, if any at all, if they're not just holding. Whereas sellers are still trying to be optimistic and are trying to pitch that V-shaped recovery and, hey, we're not going to get any worse than this. So they're being optimistic in their pricing at the same time. So you have this sort of no man's land between buyer and seller price valuations. And then you have very few transactions because of that. And real estate really relies on transactions in a lot of ways to understand what investors are valuing the real estate at, or the revenue stream, if you want to call it that. Commercial real estate space, what you're really selling is a revenue stream, less so property. You're selling a piece of property, but you're really buying the rental income stream that comes with that property, and the safety of that revenue stream really determines the price. And investors are generally believing that that revenue stream is becoming less and less safe as we get further and further into this crisis. Even though the stock market's plugging along great, that's really because of things like the Fed, not really because the fundamentals are good, and that affects real estate as well. While real estate prices have mostly stayed stable for now, it's mostly because there hasn't been a lot of transactions. And if we start getting into a wave of foreclosures on the commercial or even the residential side, you might see some of that downward pressure on rent and real estate prices, which will definitely trickle up or trickle down from commercial real estate. And once that starts happening, at whatever time that happens to be, that's when Sam Zell is going to be ready to pounce. And that's exactly what Sam Zell appears to be waiting for. And he said that he is actively shopping for an office property. He doesn't believe that office is on its way out like a lot of investors or just people who may be less familiar with real estate would assume. Even I assume at times that office is in a kind of its weird transition phase right now, where a lot of companies have basically been able to test whether or not they actually need this office space to stay productive. And some companies have vied not to actually require their workers to come into the office. And they're really pushing remote work, not only for worker safety, but also to save costs. If you don't need the office space, you don't have to pay office rent. However, Sam Zell doesn't see that as a very big threat, since he thinks that office space, or more generally communal working space, is fundamental to running a successful business or just any successful team. You can't do everything remotely, and he thinks that while there might be a downward trend for now, he thinks long-term office is still going to be strong, so he's still looking for a good office opportunity. In other words, he sees it as more of a short-term occurrence rather than a long-term trend, where on the other side, he thinks that retail is definitely, he calls it a falling knife, and he doesn't want to get into retail because that is going through a ton of pain right now, and that trend seems to be a lot more permanent than maybe this little blip on the radar that we have with office space right now. I really shouldn't say it's a blip on the radar. It's very big, and Sam Zell still doesn't think it's that big of a deal in the long run. And that's all any investor really should be concerned about. It's the long term. The short term, there's always going to be weird things that happen and very bad events that will drive markets down. Now, if you can take advantage of opportunities in a down market, then great, more power to you. But ultimately, it's how your investment performs many years down the line that really determines whether or not it was successful. Sure, you can turn a quick profit in a day or two, but how reliable is that over many years? How many times can you double your money in a day reliably before you get burned? It's very unlikely that you can replicate that sort of short-term success over and over to create true long-term success. Whereas if you get little gains each day and each year, you compound that over many, many years, and then you get really great long-term returns that are a lot more reliable than trying to get huge short-term returns over and over and over again. Not saying that you couldn't potentially win every single YOLO options bet that you make, but I don't think it is very likely. Now back to this market, Sam Zell does think that we're going to see a lot quicker foreclosures than compared to the financial crisis, where there was a lot of almost desperate extension. He called it extend and pretend, to try and keep loans on the books because banks frankly were desperate and they didn't have a lot of liquidity at the time until the government stepped in and bailed them out. So we had a lot of really underwater properties, or properties that weren't actually servicing their debt, that really extended it out way longer than it needed to be extended out. So the foreclosures took a longer time to happen in a lot of places in the commercial real estate space. And that's when Sam Zell really made a name for himself, was in the financial crisis, when he sold a ton of properties at the top and then bought them all back at the bottom pretty much and made a huge fortune there. So now he's sitting on a lot of cash, but he doesn't think that that same extend and pretend sort of thing is going to happen. He thinks that banks are going to be way more keen to clean out their books of any underperforming assets, that is, any underperforming loans or loans that aren't being serviced. He thinks that banks are going to be a lot swifter in actually getting them off the books and going in through the foreclosure process, or doing some sort of workout, pre-foreclosure or something like that. And he's obviously well equipped to take advantage of that sort of situation if it does happen sooner rather than later. But even if it doesn't, he still has a lot of cash, and he says he's constantly shopping for deals. He's not waiting for any one event to happen. He's just looking for deals that have good fundamentals that meet his required returns for his firm. Equity Commonwealth is the main one that he'll be using. If Equity Commonwealth can find a good deal, he says they'll close on it. And that's probably the same for any investor out there. If you ever find a good deal, why not close on it? Because who knows if that same good deal is going to be there tomorrow. Sure, you might miss a better deal down the road, but you could always say that. There's always a better deal out there.
There's always a bigger fish.
But you can't just ignore all the good ones that are right in front of you if they actually present themselves. And on a much smaller scale, that's kind of what I'm doing right now. I'm looking for properties, even though I know the market is really overpriced in a lot of ways. But if a good deal shows itself, I'm going to take that good deal. But the thing is, there's just a lot less of those good deals right now. That's all that really happens in an expensive market. It's not that all good deals are gone, just that they're much harder to find, and you have arguably more people chasing a smaller number of deals. So it's just a little harder to actually get those good deals. Whereas in a down market, there's usually a lot more good deals to choose from because people are trying to deleverage and they're getting more desperate. So there's a lot more motivated sellers, and those with cash, like Sam Zell or any other investor who has a lot of cash, can be prepared to actually take advantage of those situations since they're not over leveraged. They have the assets to actually go through and make deals happen. I'm certainly not alone. Sam Zell's certainly not alone. There are a lot of investors right now who are holding on to a ton of cash, waiting for opportunities, because they saw the opportunities that presented themselves in the financial crisis just over a decade ago, and there surely will be some in the coming months and years that will present themselves as well, that will leave probably a lot of investors in a much better place when we look back at this many years from now. Of course, it all depends on a variety of circumstances, when any crash will occur, when actual good deals will present themselves. You never know when things are going to happen. You never know when the government's going to step in and cause even more turmoil by throwing more money into the system, by borrowing against our future production. Who knows when all that stuff will happen? All you can do is stay prepared so that when a good deal approaches you, you can actually take advantage of it. Now, if you guys don't have $3.5 billion in cash, but you still want to invest in a lot of commercial real estate, check out the portfolio that I created in M1 Finance specifically for REIT investing. That is a real estate investment trust. I put together a bunch of different real estate investment trusts in all of the different sectors of real estate, and you can adjust those holdings as you see fit. I'm not a financial advisor, so I'm not recommending this portfolio to anyone, but if it's something that you like, definitely take advantage of it. I'll leave a link in the description below. You can actually copy that portfolio with all of those REITs in it. You can adjust it as you see fit using M1 Finance's really user-friendly platform. And if you guys end up signing up for M1 Finance using one of my links, I might get a small commission if you end up funding the account, but it's a free brokerage, so it's of no risk to you. Definitely check it out, and if you like what you see in there, definitely use it for your own advantage. And if you don't like it, then obviously don't use it. Just do your own research before you make any investing decision. And once you do your research, you can get started with very little money because M1 Finance has fractional shares, and you're investing in REITs, so you're buying little portions of a ton of different properties at a time, so you can have a diversified real estate portfolio, and diversified not only between properties, but also between sectors within real estate. So it's a great way to get your portfolio started if you're looking for a broad-based approach to real estate. Obviously, there are tons of index funds out there that you can invest in as well. Just another option for you to consider. There's even a Sam Zell slice in this portfolio, which includes Equity Commonwealth, which is the one that has all of the cash sitting on the sidelines right now. So hey, if Sam Zell finds some good deals, you can ride the upside on those too. Obviously, there's a risk to investing in any company, but it's in there. So if you want to invest with Sam Zell, you can do that using the Equity Commonwealth and also his other REITs that he has in there. And I have those in that portfolio. Again, check out the link in the description below if you want to check out that portfolio. Well, anyways, that's all I've got for today. If you like this video, please like it since it helps the channel out a lot. If you like this sort of content, especially about real estate and investing and kind of what bigger players are doing right now, I try to follow those and make videos about them on a weekly basis so that you can stay up to date on what's happening in the market, but also learn from what more successful investors are doing and even learn from failures that investors have made so that you can be a better investor and just have a better personal financial situation by learning from them. So if you like that sort of content, definitely subscribe so you don't miss any of those updates. Again, I post new videos every single week and I wouldn't want you guys to miss out. And what do you guys think of Sam Zell's strategy? And what do you think about holding cash right now? What are you guys doing with your investment strategy? Love to see it in the comments below. But until next time, take care.